Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are up 34 basis points on the 1 hour chart. We made a slight reversal throughout the day and we are approaching positive MACD. I do see that happening in the next coming days. As for the 4 hour chart, we still don't have a convergence on the MACD yet. We're still oversold on the RSI. And for the daily chart, we see a nice reversal in shape. But I do see it's not quite the time to hop into natural gas yet. However, it's still a bit concerning because it can still head down lower, and we still have not touched oversold RSI yet. So that's one to consider. And the MACD, if you see the MACD, it's quite wide in terms of the gap, so there's no signs of convergence at the moment. So at the moment, since we touched all-time low today, the only way we can see is a possible resistance, and I don't see there's a chance of hitting that resistance anytime soon. But however, anything is possible. So at the moment, the resistance that I see immediately will be around the price of $19.12. That coincides with past support that dated back to October or early October. And by that time, the 9-day moving average shall meet at that price level in time. And for the resistance, we touch, or I should say support, we were hitting all-time low earlier today at the price of $17.56. So if we were to move down lower, that price movement is roughly around 1.36, and if we were to reverse and head up higher, it should be 7.7% to the upside. So the forecast model is now in the link below, so do check it out for natural gas. And we also have a new tab ready for trending. So this coincides with trending stocks or very active stocks, so do check it out. So for natural gas, we have all the results here. Check it out on your own time, and you can see the other models that we do not review in the video. So back to the forecast model, I'll go day by day where natural gas will head to in the next coming days. So we have one day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to September 13th to December 7th, 2017. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we're touching the upper Bollinger Band, and then we proceeded to break down, touch the bottom Bollinger Band, and then we made a slight reversal to touch the upper Bollinger Band at this instance. However, that did not last long. We made a reversal and touched the bottom Bollinger Band once more. And we start to see a similar pattern on the trend in question as well. We touched the upper Bollinger Band in the beginning, and then slightly at this instance, not quite touching the upper Bollinger Band, but a very good attempt. And right here we see it touch the bottom Bollinger Band, and then one right towards the end. So we have two instances where we touch the bottom Bollinger Band. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So again, the model that we just examined was September 13 to December 7, 2017. Back then, natural gas was down roughly around 1.64%. So slightly to the downside. I don't expect natural gas to continue heading down that far that what we seen earlier last week. So overall, I just do see natural gas heading down a little bit lower. That is all. So again, this forecast model is now in the link below. And if you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.